Hi, everyone. Thank you for being so patiently waiting for hearing some of the OGs from the industry talk. So we'll start with the agenda for the day, which is, finding value in a volatile market. I know all of us have been very troubled with the way public markets have behaved over the last 2 months. And we'd love some clarity from those who do this on a professional basis. So my question to the panelists, maybe starting with Augie, would be, we've had the whole slew of regulatory clarity, particularly in the US, Fed starting to cut, institutional adoption happening, and we are still down on a year-to-date basis. So what are the key reasons why, the state of crypto is such, and when do you see this recovering?
Yeah, no, I think it's a great question. And maybe first, just to establish the point that you mentioned, there is a lot of regulatory clarity coming out of the US off the back of the Genius Act, the market structure bill that's working its way through Congress. And I think that has effectively opened the floodgates for enterprise in the US to begin experimenting with stablecoins. You see Visa, Stripe, Crossover Bank, Klarna, many others starting with their stablecoin initiatives. Now, to answer your question, in my opinion, the reason that there's this disconnect between the public markets and all of these tailwinds is, one, stablecoins and alts are two very different things. I think the latter has been hit very heavily by deleveraging events like 1010, overall macro uncertainty. And I think the other part of the puzzle really is the story of this cycle, in my mind, has been one of institutional adoption. And institutions don't buy shit coins, right? They buy real cash flow generating businesses, which is why, in my opinion, you've seen things like Hyperliquid hold up relatively well.
Got it. Nitin, any thoughts?
Yeah, I mean, I think that really does explain a lot. The other thing I would add is AI, which has sucked out the entire sort of oxygen out of the investing landscape for everything else. So I just spent a month in San Francisco, and I couldn't get anyone to really talk crypto. And that's not to say that there's not a lot happening, but the risk on money is just chasing AI right now. And when you have this consensus view that OpenAI, Anthropic are going to be trillion-dollar companies soon, in 2 years, that's where the risk capital and plays like those. And I think it probably is also creating more opportunity for crypto, but not in the short term, but in the medium to long term. So when you look at AI agents now actually entering every use case, at some point when they start transacting between themselves and paying themselves, you probably have a really good reuse of blockchain in a much bigger way. Both retail and institutional will probably rush towards that. But it reminds me of 2017, actually. The Fetch.ai, some of the folks in the audience would have probably heard of it. A project like that actually was talking about the use case of machines paying machines. And so what we were talking about in 2017, it is finally happening. But that's a medium sort of term upside there. And perhaps last point would be, certainly there's still a lot of hangover from 2021, 22, 23 lockups expiring and a lot of sell pressure, I'm sure. But yeah, I think apart from the AI, the bigger issue is that retail is not seeing the adoption to the same extent. It's very healthy what's happening, which is all institutional action.
Got it. Yeah, Amit, and also if you could ponder on the second bit as to when do you think this will recover?
Yeah. So I think, I kind of agree. I think the theme of the year was institutions coming in with ETFs, with DATs, and like AI sucking a lot of liquidity. I think the other thing which is happening, what we are seeing is increasingly the crypto space is getting very correlated with fiat markets, normal markets. And so, one announcement by Trump, one announcement by the Fed, it really impacts not only like normal markets, it also impacts the crypto markets. So I think, jobs data, non-farm payrolls, what is FOMC going to announce in the next Fed meeting. All of these have a big impact on the crypto play. And I mean, this is the first time where we were just chatting like where altcoins have not really pumped. You know, if overall we still agree that we are in a bull cycle, altcoins have not really pumped. Having said that, I think increasingly also projects that have done really well is, you know, like projects like Hyperliquid, which only raised from community. So generally, like community-first projects, I think we have seen them do very well. So there is a small subset of projects which have done extremely well, but by far, other than the top 5-6 coins, a lot of them others have suffered. So to the second part of the question, I think again that's a billion-dollar question. We feel that we run on Hopium, so we still feel that there is an alt pump yet to come. But overall, we feel that there will be a correction sometime next year, maybe in Q1, Q2 of next year sometime.
Got it. Thanks a lot. Augie, you mentioned that there's been a divergence in terms of the demand for, like, say, the not so useful coins versus the blue chips. In that sense, we've seen that we've had a plethora of token launches despite this divergence playing out. So what would be your advice to founders who are looking at launching a token at a pre-seed, seed stage, given that private markets have really sort of dried up for a large part of them? So, like, do you think it's good to launch a token because the way they're working, it's not something that's being lucrative in general, or because the valuations are converging between equity and tokens, it's useful to be equity first and then figure out a token utility later?
Yeah, it's a good question. I mean, I think our house view is that you should, and this is not rocket science, but you should generally launch a token when there is something to coordinate, not just when there is something to kickstart. Like too often it's that latter use case, not the former. I'm using it sort of as a fundraising bootstrapping mechanism, which is okay. But the areas that we've seen it work best is there's also a coordination problem to be solved through the use of token incentives. And so generally what that means in the life cycle of a company is post PMF. You achieve some degree of traction and success, and then you launch the token. Of course, there's a lot of other considerations around, is it more of a centralized business or is it decentralized? You need to exert some level of control at the beginning and then eventually kind of decentralize. There's all of these nuances, but that's generally our mental model.
Nitin, any advice to founders, token versus equity? I know Indian founders face that dilemma even more so.
So I feel like every year we say the same things.
Yeah.
And it's been many years now. I think I will start by saying my perspective is a bit biased because I'm purely an equity investor to start with, and I prefer to enter in the current fund that I am running and looking at tokens a bit later. So naturally, I'm a bit biased. I mean, look, there is not one perfect answer, but I agree with Augie. We used to think tokens were great for fundraising. They were in some crazy bull cycle. If you normalize things, it's a terrible thing for fundraising. Yes, you can, it just creates a bit of adverse selection. You can, for every one good project that actually a good founder who's actually thinking long term, you have 20 others who are just trying to find the fastest way to get rich, and it just leads to this vicious cycle of short-term thinking on behalf of everyone. And I think the worst thing that I've seen happen is solid founders with solid products launching a token and things going sideways. It's happened in my portfolio. I won't name, but and I think it's not shocking because earlier you're waking up in the morning and thinking about what problem you're solving, what features are needed, and then next day you're waking up worrying about somebody yelling at you on Telegram. Right? Most companies should not be that public. Most projects should not be that public until you've reached some critical mass or some signal of PMF. And Uniswap and others were great examples of doing it very, very retroactively. And for some reason, I think founders are not able to resist the urge. And I think the other reason, of course, is the capital keeps asking for it. So unfortunately, the quote-unquote longer-term funds have, many of them have exited crypto. So you have some great sort of liquid funds, and you also have some other venture funds who insist on a token because they think that's the purpose of Web3 investing. But I mean, you know, for every 1 or 2 successes, there's like 100 failures. And I just think it needs to stop. But that is a function of so many other variables.
Yeah, curious to know your take here, Amit, given that, you know, you are big bulls of the deep in thesis, a lot of them are token driven. What are your views on token as a mechanism to raise capital?
Yeah. So maybe just adding a little bit of subtlety. So there are 2 things. One is whether you should have a token or not, and then whether if you have a token, how to play the capital markets game. So I think this I agree. I think by far a vast majority of projects, you know, it doesn't make sense to have a token. In fact, it doesn't even make sense to do them on Web3. So the first question you should ask as a founder, and this is something which we tell to all the founders, the first question is, okay, does this need to be on blockchain? You know, if it needs to be on blockchain, is there a need to have a token? Is there a governance angle in here? It should never be that the token is only there for raising. That's the worst decision you can take as a founder, right? So if the decision is that, yes, it needs to have a token, then I think the biggest mistake we have seen founders make is sometimes they try to raise money separately on equity, separately on token. Like that's the absolute, you are creating a nightmare for yourself like 5 years down the line, right? So the best, generally for vast majority of projects, you raise money initially as equity while you are still finalizing your tokens, right? You give like a token warrant. Now, there is a subset of projects which are purely decentralized DAOs. They will only issue a SAFT and raise via tokens. That's a separate category. But for most of the other projects, you raise equity plus tokens. But eventually, I would say 99% of the projects, the value accrual should happen in one of them, either equity or tokens. Only 1% of the projects, it makes sense where some revenues from sales and all are going to the equity side, and some are going separately on the token side and so on. So, but I genuinely believe, like from a decentralized point of view, there are so many benefits for having a token in terms of liquidity, in terms of listing and everything. But you should know how to. Today, what is happening is centralized exchanges and market makers are actually keeping most of the upside. So you should know how to play the capital markets game, how to time it correctly. And then for Deepin, for example, Deepin is again one of those classic things where at the crux of it, it is decentralizing capex. So if you don't have, you know, millions to invest, how you with, you know, like $100 or for example, for Wi-Fi Dabba, like $40, $50 can install like a router at home and start minting tokens and earn and contribute to the economy. So yeah.
Yeah, so we've all seen a lot of crypto cycles. I mean, if we were in the Web2 world, we think we're obviously more than a decade in. But I just wanted to ask each one of you, what is that one thing that you thought would actually happen in crypto in terms of evolution when you joined that hasn't panned out today the way you had envisaged? So yeah, any thoughts on that? Maybe we can start with Amit this time.
Yeah, there are quite a few actually, but like the one which maybe comes top of the mind, I would say is decentralization. You know, it's amazing when you actually break it down how centralized things actually are. You know, maybe there are like, you know, 3 or 4 centralized exchanges, you know, contributing most of the liquidity, and there are maybe like 5 people calling most of the big shots in the entire industry. For any decentralized, you know, kind of protocol, there are maybe like, you know, 15, 20 validators, you know, which are driving most of the consensus. So I think that is one of them. Yeah.
Got it. Nitin?
I mean, if I have to say 2 things, one, I think related to the last question, that tokens would work as well as we thought. Not across the board. They would work as effective fundraising mechanisms, as effective coordination mechanisms, and the overlap between the users and investors would be very high. And it would disrupt venture capital. I got into because I thought this would be a better way to do VC. I think as we've seen now, human behavior and psychology and macro interest rates, etc., drive so much more than anything else. And so speculation has not gone away at all. You could say crypto is still largely a casino. And the second point is, I think the asset side has become fantastic, right? So much sophistication. When you look at institutional adoption now, and RWA is becoming more real finally with stable coins, etc. I think the consumer application side, like looking back, we thought it sounds a bit naive now in hindsight, but I mean, folks like me, again, maybe a bit naively thought that there'll be decentralized versions of everything on the consumer side by now, like decentralized Uber and decentralized social networks and all.
Virtual avatars,
Yeah,
NFT-gated access.
Yeah, so the application side, or where the average person, every year we talk about taking it to 1 billion people, right? And yes, in a sense, it's happened because some hundreds of millions people have exposure to the asset in some form, but usability on a day-to-day basis is still a few years away at best.
Augie?
Yeah, for us, it was roughly the same category, which is we made quite a few consumer bets in 21 and 22, and broadly all of that stuff, gaming, content, IP, with some exceptions, has not worked. Our learning as a firm has been, while digital property rights are a long-term secular trend, it's not necessarily an urgent one. And so we don't know if it's going to happen in 5, 10, 20 years. I think the other issue, when you really double-click, it was always a very nice narrative, like let's give power back to the people, let's give gamers their swords, or whatever the Vitalik story is. But when you actually double-click, many of these users have a very strong aversion to this type of stuff, almost an allergic reaction to this type of stuff. And so therefore, it wasn't very clear to us actually how large the TAM was, if you will, or how many people actually want this. But yeah, that's been our learning. By the way, I should also add just the caveat, which is we are totally open to backing the next generation of consumer founders. We just need, folks to dream alongside with and really pitch a compelling vision.
Yeah, going from what's not really worked to what could work, I'm curious to understand what are the subsectors you guys are most excited about going into 2026? Amit?
Yeah, sure. So I think generally, like what we try to do is look at sectors, before they become trends, before they start showing up at conferences and become, like, for example, for Deepin, we were investing back in like 2018, 2019 when helium was, kind of there, and nobody gave a shit about Deepin at that time. So I think few sectors like we are actively, like right now, at the moment, like the hottest thing we are looking at, we have done a few investments there, is prediction markets. So both like binary prediction markets, also look at kind of pari-mutual betting. So we have done a few in the Solana space and a few others, and also some which are building, kind of building blocks for prediction markets. The other one there are a number of Me Too's like throughout. There is actually like very little innovation actually happening. The other one which we are very keenly looking at is FHE. And again, maybe like privacy with the whole Zcash rally, again, I think it has brought into focus like how important privacy is. So FHE is again something which we are looking deeply at, and this. And then on the Deepin side, overall Deepin we are still bullish. From there also looking at, we just announced investment in Dios token. So basically, which is allowing community to invest in robotics projects. So Ex Machina is the name of the entity. We co-invested in the community round there. So robotics on the Deepin side, that is another area. Yeah.
Got it. Nitin, anything you're looking at, excited about in terms of the next subsectors?
Yeah, I mean, while we are talking about stuff that hasn't worked, I will continue to be very optimistic, and it's our job as early stage VCs to keep backing things, even if something didn't work out in 23 or 24 doesn't mean it can't work out in 26, 27. So I think the concept of everything from Deepin to DeSci, consumer social, and of course now a lot to do with sort of stablecoin infrastructure, I think they just fundamentally make sense, and so we will continue to look at them, including things like gaming, which I also agree has been a bit of a weird disappointment. I would have thought that would be one of the first like consumer, like a billion-person use case, right? But the other thing I'll say is, again, AI, the intersection, but not like in a, I think a lot of people just talk about it for the sake of like AI X crypto. I think that's been around for 2 or 3 years now, people have been talking about. But like, let's get real, right? Like, now we will have AI agents by sometime by 2027, each of us will be using about 10 AI agents on a daily basis. So what does Web3 mean in that context, right? So I would love to see more imagination around that. Could be payments, could be security, could be privacy, could be just newer incentive structures. When you actually have like AI agents are going to be very, very mainstream very soon.
Got it. And yes, Augie, what about you?
Yeah, I would say maybe 3 areas that we're currently excited about investing in today. One, I already mentioned stablecoin and global payment infrastructure. I think that this is the largest near-term TAM in crypto today, and will likely unlock trillions of dollars of U.S. Treasury demand. And there's a bunch of ways to invest in it and a bunch of ways to build in it, right? So as an example, within our portfolio, we've invested in a bunch of payment service providers, both on the B2B side and the B2C side. Lumex, for example, is a B2B cross-border payments company in Brazil. We did Usend, which is a Nigerian remittance app that, again, uses stablecoin on the back end, so more B2C. But there's also issuance. We recently followed on to an existing portfolio company called Minteo, and Minteo does local fiat asset-backed stables in Latin America. So think like Colombian peso stablecoin or Brazilian real stablecoin. And then, of course, there's the whole traditional part of this equation, which is probably best exemplified by our recent investment in Erebor. So Erebor is Palmer Luckey's new project, and it's basically a crypto native bank. This idea being trying to solve some of the issues around Operation Choke Point 2.0, but then also reinventing banking from the ground up using stable coins for greater capital efficiency. That's the vision now. So that's kind of one area. 2, I would say, is trading venues and asset classes that focus on catering to institutions. So the couple examples I could give you in there is we recently backed D2X, which is a licensed institutionally focused exchange that offers specific tooling for sophisticated traders in Europe. And then we also recently did Architect X, which is trying to offer perpetuals but for equities in the US to institutions. So I think that's interesting. Even existing asset classes that for the longest time we were asking, like, when will they come? Options, for example, like, when will they come? We know in TradFi they're very large. Why have they not shown up in crypto? Well, you look at the numbers, they actually are starting to come, right? IBIT, open interest on options, for example, now is almost at the same size, if not greater, to Deribit. And I think that just exemplifies the demand for these assets, a lot of it coming from institutions. The last thing that I'll mention is what we call new sources of yield on-chain. And so, for example, we recently backed a company called Axis. What Axis does is they basically offer an Athena-like delta-neutral stablecoin, but the yield does not come from the basis trade. The yield comes from centralized exchange arbitrage. And so basically what they're doing is democratizing Wintermute's business model, if you will, and passing that yield onto users.
Controversial in current times, but definitely a lot of diversity on this panel regarding the future sectors of interest. Moving on from, the entire job of a VC is to imagine a future despite, things not having gone a certain way. But a big part of the reason why a lot of the Indian founders are forced to go outside is because of regulations here. What would be your recommendation, request from the government in terms of pushing crypto adoption forward, as well as your advice to founders from India who do dream of building in crypto, but just aren't able to do so? Yeah, sorry.
So,
Amit, please.
Yeah. So, actually, like for us, we are a very distributed team within Borderless. We have like offices globally, US, LATAM, India, Europe. We have a significant presence in India, and we really want to back solid Web3 companies building from India. But the idea is, okay, how do you classify a company building? Given the current regulation for us, even if an Indian founder is building a company from, say, Dubai or Singapore, we still count it as, it's an Indian company, right? And for us, just like the idea for us is just like Polygon put India Web3 on a global pedestal. We have invested in Open Ledger, for example, which has done extremely well. They got listed on Binance, Upbit, BitHump, like all the major exchanges, working with some of the key, kind of institutions. So for us, the idea is how do we get strong entrepreneurs from India who understand Web3 and basically put them on a global pedestal, whether they are doing it from here or maybe because of the current state of regulations, they might be doing from Dubai or Singapore. That's at a high level the context. But specifically coming to the regulatory side, now we are in talks with a number of companies. Ang, for example, they were also here, I think, which are doing a lot, which are working in the sandboxes with RBI. They are doing a lot to, kind of be the first ones in line once regulatory clarity does come in. I think from a government point of view, I think, again, there are a lot of factors to balance everything out. But I think given the untapped talent pool we have in Web3, almost every single protocol has founders from India. Indian diaspora actually, building development, and the development talent we have, it's a huge waste of any source of revenue which the government can make by actually not promoting Web3 and, having more of that. So I think the concept being you want to protect investors from Bitcoin scams, from scammy investment schemes. If that can be done, and as well as, the whole developer community and teams building from here can be promoted, I think sandboxes and all are a great way. It can be a good mix of, for example, RBI having a private, chain, CBDCs which they control, as well as something which is semi-private, which again with global banks are doing. I think that would be a great step forward. I think, and generally what has done is once US has come up with a regulation, with the Genius Act, if we can then follow up with some similar regulation, from here, I think that will go a long way.
Nitin, you've been leading the way for us for a very, very long time. Again, maybe we may echo the similar things,
are you calling me old?
But let's repeat whatever asks were and where we believe that this ecosystem can go to in India.
So this is a painful topic for me because I think, like my peers, but perhaps a bit sort of earlier, been banging my head against the wall, and for a good part of 2 years, spent a lot of time on the issue of regulations and why this is really important for India. We should not miss the bus. And, it sort of gets attention, but it doesn't make a difference. So I think I have no advice for the government, if that was your question. I think we've missed the bus on AI and also on Web3 in a big way. So I think the advice I would have is only for founders, which is stop worrying about it. Think of yourself as a global citizen. Create a global cross-border company, which happens to have some of your team in India. Be wherever you need to be compliant, and almost don't think about this stuff much, because focus more on whether you're building something interesting, whether you have real patience, because I don't think that 21 bubble is coming back. That was a bit too irrational. So I think the biggest problem I still find, even with some of the best crypto founders that I work with, is lack of patience and feeling like the narrative is changing every 2 months, so hence I must change every 2 months. Yes, you need to be nimble, but if you keep changing what you're solving, you'll go nowhere. So patience, long-term outlook, integrity. I shouldn't have to say this. And then the last thing I always say is, look at founders from India who have created successful large protocols, networks in Web3, and look at many others who could not. And ask yourself, what is the difference? Why does a Sandeep Nelwal exist, and why are there only such few, despite thousands of people in crypto conferences? And I think the difference is probably down to having a mentality of partnerships, ecosystem building, zero ego, collaborating with as many nodes as possible, thinking globally, not just India, having that mindset. And I would love, all of us would love to see many more Sandeep Nailwals, right? So you can ask why the market is not up for the year, but I still think that the talent quality keeps getting better every year, and it's just a matter of time before many more Indians are creating these kinds of platforms.
Yeah, Augie, you invest globally, so would love your perspective on this.
No, I mean, I completely agree with everything that has been shared. I think my advice to Indian founders would be things may not look very rosy today, but stay the course. You know that there are many supporters, the folks on this stage and many others, that believe in the promise of this market and the unique potential of the Indian developer. I also think that there's a lot to potentially look forward to. Lots of adoption, new use cases like the ones we've been discussing, and recognition from organizations like DevConnect, ETH Global, Emergent, that India, specifically India, will play a unique role in this global movement. And maybe the very last thing I would say is, when all seems lost, I mean, think back to why you choose to do this. Why do you choose to wake up and bang your head against the wall every day? It's not to build a better casino. It is to build a technology of transcendence, right? It's uncorruptible money that will free us from the excesses and injustices of fiat. I exaggerate a little bit, but I think that that vision is worth fighting for.
Yeah, when the going gets tough, the tough get going. This brings me to my last question. A bit selfish. While there are very few funds that do focus on Web3, if there is a young investor looking to break into Web3 investing, what are the key things they need to do to get on your radar? Amit, who could be your next hire?
So, like I would say that, especially, and this applies actually not only to Web3, also to Web2, I would say it's actually extremely difficult. There is actually plenty of capital. It's different thing to sit on capital and, somebody giving you respect for just because of you are on the other side of the table, right? The easiest job in the world is just writing a check, right? But it's actually very difficult to earn the respect of founders. And you really earn the respect of founders if you have been in their shoes. So actually for a lot of young people, I think sometimes it is good to be on the other side of the table, get a bird's eye view. As you go ahead in life, again, your risk-taking ability does go down like every 5 years, 10 years. The best thing you can do if you want to become an investor is actually become a founder first. Actually build a company from scratch, earn your stripes, and then sit on the opposite side of the table.
Nitin, any differing opinions there?
Advice for new investors?
For new people to get into VC investing, for Web3 particularly.
I'll say the same things that I said about being a founder in Web3. You can only give that advice if you are an investor who thinks the same way. So, obviously integrity, long-term view of things, asking the right questions, thinking more globally, having that mentality of opening doors for your founders in a global sense. That's why guys like these are very valuable because, and Antler as well, because I think all three of us are very, very global, all three funds here. And I think that reach is really important, to be able to help someone who's an A+ founder. And the only other thing I will say is, and even more so in crypto, is just get to know the founder. The asset you're investing in when it's super early is actually not a protocol or a product. The asset you're actually investing in is the mind of the founder. And because almost everything will change in 6 months or 12 months. So you can do all kinds of analysis on token allocations and get the best SAFT and all of that. But if you've just chosen the wrong person, you will lose money, period. So, and even if you've chosen the right person, you might still lose money, but at least you will have given yourself a good chance. So just don't FOMO into things, spend time with the person before you invest.
Got it. And Augie, who's going to be your next teammate?
Yeah, if you're looking to break into VC, read a lot, write a lot, network a lot, and just generally be curious about the world, and I think that's a good place to start.
Great. I think we had a lot of fun understanding a lot of nuance in the way the world is working in the world of Web3. So I'd like to thank my panelists again here for taking out the time from your busy schedules and helping us understand this world better. So could we have a round of applause for them? Thank you so much for coming here. Thank you.